In this video, I'm going to be giving you the exact trading strategy which I utilize myself to generate over hundreds and thousands of dollars in trading profits. Let me explain. So first of all, point number one, what we're going to be doing is going through the exact confluences. And those are, as I have clearly stated over here, supply and demand, market structure, price movement with PVD and CW, and liquidity. So the first one that I want to point out over here, because I'm going to be giving you guys a trade example on pound dollar, is market structure. So first of all, market structure, there are three types of market structure, and that is the overall swing structure, which is in this particular situation bearish from this high in towards this low. And what we always like to use is a premium versus discount tool. Then the second form of market structure, so let me just write them down for you. So we have swing structure. The second form is internal structure. Internal structure is a structure utilized to trade the overall pullback in towards the highs. As we can clearly see, we have a high, higher high, higher high, higher high, and a higher high, including higher lows each time. And we can pretty much use the internal trend to trade the overall pullback of the overall bearish swing structure. So at a certain point in time, what you'll see is that, for example, the internal structure flips bearish. And from that moment onwards, we then, for example, expect the overall trend to continue in towards the downside with the overall swing structure. Then we have the third form of structure, which is fractal structure. And this is a very aggressive form of structure, which is based on the wicks and which we utilize to time entries. But I'll explain this in a second. So in this particular situation, I've now explained pretty much the structure that we have. We have a bearish swing structure, but the overall internal structure is still in control in towards the upside. So therefore, because the internal structure is bullish, I am still interested in looking for those potential longs. Now, moving on in towards supply and demand, we had an area of supply over here, which was pushing price in towards the downside. But as we can clearly see, that was of very short duration, after which we broke the overall supply zone in towards the highs. And now we are currently located inside this overall sell before the buy, which is acting as your area of supply at the moment in time. Now, when we trade internal structure, you always want to trade internal structure in towards an area of supply, as for example here, because that is where we expect the market to shift. When we see, for example, an aggressive reaction, as we had over here, and then we look to our left, what do we see? We simply see a level of support and resistance. So it is likely that people are then going short on that bearish candle with stop loss above the high, and that is why it is likely that that high is, for example, going to be taken out. And that is then a high that we can use as a target when trading the lower time frame. But I'm not going to go into too much detail. Let's just keep it nice and simple. So in this particular situation, we have one other area of supply over here on the daily, which is located right over here. So this is now the next area of supply which we have and which we're going to be targeting in this particular situation. Then after pointing out that area of supply, the next thing that we can do is look for liquidity. So liquidity is pretty much spotted in areas of consolidation, because people are under the assumption, or at least us as traders are under the assumption, that people go short at areas of consolidation because they see the top of consolidation as an area of resistance. So like I just pointed out, for example, over here we have support and resistance. So it's very likely that stop losses are placed above the highs of that area of consolidation. Now in this particular situation, we have an obvious liquidity high, which is located over here. So this is seen as daily liquidity. Therefore, when I now look at this market, I expect the market to push up slightly higher and then potentially reverse from that liquidity high and from that area of supply. So I hope it's clear until now. If it's not, make sure to join Discord. Link is in the description down below, and ask any questions you have over there. Now moving on, I think it's very important to go in towards the lower time frame and point out what we expect next. One other thing that I just want to highlight over here on the daily is CW, and CW is also known as channels and wedges. And always when looking at price, we try to identify the potential forming of a 1, 2, 3, also known as my channel or my wedge, and then look for that for the downside, as that has the highest probability of providing price with a deeper and more substantial correction. So those are the four confluence points highlighted over there on the daily. Now let's go in towards the 4 hour and see what we can do over here. Now, looking at the 4 hour, I think it's very clear to say that the 4 hour is bullish. It's the same structure as on the internal daily. We have a 4 hour high over here, a 4 hour low over here, a 4 hour high over here. So market structure is bullish, swing wise, right? Now, moving on in towards supply and demand. Where do we have demand? We have demand located over here inside this sell candle. So this is our area of demand from where I expect price to provide us with a potential reaction. Now, going in towards price movement, so PVD, also known as premium versus discount. If I draw this in, I can clearly see I'm at the 50% mark of the overall swing range, meaning it is now high probability to start looking for longs. Next to that, we have the final confluence point, which is liquidity. So diving in towards this chart, I'm now looking for potential liquidity, and the preference for liquidity is that it lies in either the move up or in the move down, obviously. Now, in this move up, there is no such thing as liquidity. So what does liquidity look like? Well, it looks like pretty much an area of consolidation or a bump in the road when price is moving up, but not like a substantial pullback. So just to highlight this, a good example, for example, would be, let's say over here, we have an area of consolidation. So inside of here, people assume that support is formed and they put their stop loss below the range. So below this range, you can see stop loss get taken out, then reversal in towards the highs. So I'm looking for that exact same pattern over here on pound dollar, looking for kind of like a bullish reaction, one more move down. So kind of like this area of consolidation, the low gets taken, and then that real bullish move in towards the highs. Because that would mean that we have demand, we have bullish market structure, we have discount, and we have liquidity. So that would mean that all 4 confluence points would line up. Now, moving in towards play, I think it's very clear to see that we see that initial bullish reaction. So from this point onwards, I know that liquidity is being built up below this low, because a lot of the people who over here on the 4 hour went long, and again, it's also a pretty obvious area of support and resistance. We can see clear support, clear resistance, and again, clear support. It's very easy to say, okay, on, for example, this strong bullish candle, a lot of the people have now put their stop loss below this obvious low, for example, where demand is formed, or below this low where most of the people have gone long. So now what I'm looking for is pretty much a liquidation of that low, and then my entry model, which I'll explain in a second, to occur. Now, pressing play again, we see an aggressive sell-off in towards the downside. What I really liked about that aggressive sell-off is that you kind of have a double low over here. You can clearly see this low tries to take out that low, fails to do so, meaning even more liquidity being formed. Then we get that spike, and from that point onwards, I'm then happy to look for my entry model. Now, my entry model is very simple. It's purely based on structure. All I want to do is I want to see a shift in the overall fractal structure. And the fractal structure, again, I explained at the beginning of this video, is structure that focuses on wicks. So in this particular situation, this is your fractal high. And what I'm now waiting for is for the market to break that fractal high, make a pullback to see demand created, or pull back in towards that demand zone, to then go long in towards the highs. So what I'll now do is I'll press play once again, and I'll wait and see. Okay, so what happens in this particular situation is that we even liquidate with this low an additional time over here, meaning that this high of the bullish candle, which we have over here in the middle, is now our fractal high. So we get that fractal high break, meaning that this sell candle is now your area of demand. So this is your 4 hour zone. We draw in the 4 hour zone, and we make it clear that this is now your area of demand. So from this point onwards, let me just make the opacity slightly higher. From this point onwards, what I'll now be doing is I'll be setting my order on that area of demand with my stop loss below the low and my target at a fixed 1 to 3 risk to reward. So again, demand, market structure is bullish, fractal structure is also bullish. Price movement, we have discount, right? We're below the 50% mark of the overall swing range, and we have liquidity like I just explained. Now pressing play, we see we get tagged in. Straight away, you see a reaction to that zone, and we start pushing in towards the highs. with eventually our TP getting hit. Now from this moment onwards, and just going back in towards a daily to highlight obviously what we were looking for, we can see that the pattern, that ascending pattern, starts to form, and we start to sell off aggressively in towards downside to where market, or towards where the market currently is at. So I hope you enjoyed this trade breakdown. Hope you can find some value from it. Make sure to join the Discord server, link in the description down below. Value for everyone and value for free. Hope you enjoyed it, and thank you for watching. Make sure to leave a like and subscribe, and we'll speak soon. Thanks guys.